Only mode.
Good evening and welcome to this special webinar on Diwali Picks for summer 2079. Uh, we have great pleasure in taking you through our picks this time around. Last time our picks did quite well. We will cover that also as part of this webinar. Now Diwali is the festival of lights, which is an auspicious time according to Hindu calendar. There are several traditions, practices, and beliefs associated with Diwali celebration. One such tradition is the Murat trading. Diwali is considered to be a period which brings wealth and prosperity. Thus, it is considered to be a good time to invest in quality stocks or begin your investing journey. Summer 2078 turned out to be a challenging and forgettable year for global equities, given the many headwinds, including rate hikes, energy crisis, Russia-Ukraine conflict, continued supply disruptions, FPI outflows, heightened inflation, and more. We saw heightened volatility in the markets, more on the downside. Indian equity markets, however, outperformed. They proved resilient, and they outperformed most of the other developed and emerging economies. Robust retail, HNI, lump sum and SIP investments helped offset the FPI outflows without too much damage to the indices or individual stocks. Nifty returned negative returns over the last summer, as did a lot of mid cap and small cap indices. Having said that, Nifty outperformed a lot of other global markets, which are down significantly on a year-on-year basis. Within Indian stocks, power, capital goods, auto, and public sector enterprises performed quite well in summer 2078, reflecting a return of cyclicals to the fore. FMCG also did well as a defensive option, even as ITC got re-rated and contributed significantly to the sector returns. On the other hand, realty, IT, metals, and healthcare were the main underperformers. IT remained under pressure due to lower visibility of revenue growth due to recession fears in developed economies and higher wage cost pressures. Metal stocks declined as metal prices fell faster than the cost of raw material and fuel or power. In India, the reservoir levels currently are high. The commodity prices have cooled off from their highs. Over the medium term, the Indian economy should be supported by a favorable policy environment, impact of PLI schemes, opportunities arising from shift of global supply chain, government thrust on infrastructure spending, etc. Indian economy remains in a sweet spot relative to many other economies, given the large demography, higher domestic dependency, as well as astute handling of uncertain times by the politicians and the bureaucracy. In summer 2079, volatility could continue, though at a slower pace. We may be close to a peak as far as the rate hike cycle is concerned. The resumption of growth at the global level, and particularly on the domestic front, is required to shake off the sluggish mood and get back on the path of sustained uptrend in the markets. India is largely a domestic consumption-led economy, now trying to expand the manufacturing footprint with schemes like PLI, Atmanirbhar, etc. The domestic investment cycle is exhibiting signs of revival, and with normal monsoons, the foundation has been laid for the economy to regain its earlier rates of growth. Indian conglomerates have paid debt and improved their balance sheets and now looking ready to expand. While the listed universe has been performing better than the economy as a whole due to shift from the unorganized to organized sector, aggressive cost management, and moats enjoyed, this dichotomy between the listed corporates and the general economy cannot continue for long. The broader economy will have to now start shaping up and grow at a faster and sustained rate for the stock markets to avoid high volatility. In such times, we are largely satisfied with the way our Diwali picks of summer 2078 have performed, though in hindsight we feel that we could have avoided some picks. Now, on the screen, you can see our picks of last year. A lot of them have given very decent return, and post the issue of the report, which was on 17th of October, on 18th of October, Indian Bank also met its target about 27.5%. So a lot of the stocks have achieved their targets, and some of them who have not achieved their targets have sort of risen from their entry levels, and their high levels are much higher than the entry levels. Some of the stocks have gone much beyond the target. Bank of Baroda was up 61% from the entry. Gati was up 62%. Network 18 was up some 52% from the entry, and such like. So as against the index, which fell 4% over the period, the average return on the stocks which have met the target was about 27%. So now this time around, we have about 10 stocks which we have picked as our Samvat 2079 picks. Now these include the names which are displayed on the screen: Aster DM, Bharat Dynamics, Bharat Electronics, Birla Corp, Cipla, Deepak Fertilizer, ICICI Bank, Rail Vikas, Sun TV, and TCI Express. These are the 10 stocks which are our picks for the next Samvat. Now, before I invite my colleagues Harsh and Nisha to take all of us through the 10 stocks, let me wish you a very happy and prosperous Diwali and a new year. Now, over to Harsh.
Thank you, Deepak sir. Good evening and wishing a Shubh Deepavali to all our viewers. My colleague Nisha and I will walk you all through our recommendations for Summer 2079. Let's start. So first up, we have a healthcare company by the name of Aster DM Healthcare. So Aster DM is one of the largest integrated healthcare service providers operating in GCC, which stands for Gulf Cooperation Council, and that includes countries like UAE, Oman, Saudi Arabia, Qatar, Kuwait, Bahrain, and Jordan. Besides, it is an emerging player in India. Its robust network consists of hospitals, clinics, retail pharmacies, and labs across GCC and India. So why we like Aster DM? So Aster DM has a unique business model with presence in India's growing healthcare industry and an established business with a strong returns in GCC. At current market price, the stock trades at an attractive valuation of 9 times its FY24 EV by EBITDA, which is at 20 to 50% discount to Indian peers. Such a steep discount is unwarranted given stable profit trajectory going forward and reduction in leverage. The company is also contemplating restructuring and divestment of GCC business, which shall further unlock the value for investors. Moving on, our investors would be knowing that defense sector has been one of the hottest sectors in recent times. Defense stocks, which gained traction post Ukraine war, have been rallying in last few months on the back of their strong order books and export potential amidst the government's increasing thrust on indigenization. The rock bottom valuations have also helped the cause. So while the sector has witnessed a sharp re-rating over past 1 year, we believe that given the unprecedented growth potential, stocks at current valuations are not stretched by any means. We continue to believe in the long-term potential of Indian defense manufacturing sector. Here, we are recommending two stocks, Bharat Electronics and Bharat Dynamics, BEL and BDL. So let's look at BDL first. BDL is India's premier and sole manufacturer of certain missiles. BDL remains the sole supplier, a monopoly, of surface-to-air missiles, torpedoes, and anti-tank guided missiles to the Indian Armed Forces. BDL is DRDO's joint development partner involved in new products, including upgrades from conceptualization to finalization. Given this partnership, their association ensures steady production orders. With India modernizing its armed forces, the market for guided missiles and torpedoes is expected to top $25 billion in next 3 years. The sheer opportunity that this opens up in the Indian missiles and torpedoes market is immensely large, especially for players like BDL. To top up that, the government is also aggressively promoting exports of missiles to India's friendly neighbor countries. With robust order book of around 13,000 odd crores and equally strong near to medium term order pipeline, we expect BDL to deliver 26% revenue CAGR and an 18% earnings CAGR over FY22-24. The stock is currently trading at 22 times FY24 earnings, which makes it an attractive buy. Now let's look at BEL or Bharat Electronics Limited. Now, BEL, a Navratna public sector undertaking, is the key electronic system integrator for defense services, providing state-of-art electronic products and systems for the Army, Navy, and Air Force, primarily established to meet the specialized electronic equipments requirements of the Indian Defense Services. BEL now has a significant presence in civilian markets as well. So why we like BEL? BEL's order book stood over 55,000 crore at end of the Q1 FY23, which is approximately 3.3 times its trailing 12-month revenue. That was showing a very strong revenue visibility. The company has maintained its EBITDA margin guidance of 21 to 23% for FY23. Order inflow during the year is expected to be around 18,000 to 20,000 odd crores. So overall, expected double-digit revenue growth, order inflow growth, sustained margins, and strong order book to ensure continued strong performance of the stock. Now moving on to the cement space. We are positive on cement sector as we believe the cement demand could remain strong over the next few years, led by government spending on housing and infrastructure creation, improved outlook for urban real estate sector, stable rural housing demand, and capex spend revival on industrial and commercial sectors by corporates. While there are a lot of names to choose from in the cement space, Birla Corp is a preferred pick for Samvat 2079. Now, why we like Birla Corp? We like Birla Corp because of its focus on trade segment, increasing share of premium products, higher share of high margin blended cement, and sizable presence in lucrative markets of North and Central India. We believe various cost-saving initiatives taken by company such as waste heat recovery and solar power plants to replace high cost grid power. Right? Increase in clinker capacity and coal extraction from captive mines would also aid revenue and margin growth. The ramp up of its newly commissioned greenfield integrated plant at Mukutban with access to captive limestone and coal mines would further improve operational efficiencies in the near term. Next, we have picked a pharma company, Cipla Limited. Now, Cipla is a global pharmaceutical company with geographically diversified presence and product registered in more than 170 odd countries. Right? Indian branded formulations account for more than 40% for Cipla. Cipla expects India business to post a strong growth going ahead, backed by growth in core therapies and synergies from its One India strategy, strengthening of the respiratory franchise, and a strong product pipeline, including complex generics, could drive US sales higher. At its current price, the stock is trading at valuation which is lower than the long-term historical average and provides headroom for expansion. Hence, we recommend a buy on stock. With this, I would like to invite my colleague Nisha to take us through the next set of recommendations. Over to you, Nisha.
Thank you so much, Harsh. It was very insightful. So, good evening, everyone. I'll walk you through the next five stock that we have recommended for a Diwali pick. First one in my list is Deepak Fertilizer and Petrochemicals. It is the second largest manufacturer of nitric acid in Southeast Asia and largest in India. It is also largest manufacturer and marketer of APA and solvent. The company serves sectors such as agriculture, pharmaceutical, infrastructure, health and hygiene. It is engaged in manufacturing of industrial chemical and crop nutrition. It has four manufacturing facilities across India and enjoys leading market share in almost all major sectors. We have estimated strong revenue and stable margin for next 2 years, and we recommend investors to buy stock at LTP for the target price of 1058. Next stock on our list is ICICI Bank. It is the second largest private sector bank, and we believe that Indian banking industry is at the cusp of credit upcycle. The back book cleanup is almost complete, and the pace of recovery has accelerated. The credit growth prospect looks promising. To ride the growth, we feel that ICICI Bank is one of the best placed large private sector bank. Over the years, it has consistently focused on de-risking its loan book by reducing its corporate portfolio and focusing on high margin, less risky retail segment. The balance sheet is now more resilient, and we have done SOTP valuation to arrive target price of rupees 999 for ICICI Bank. Next stock is Rail Vikas Nigam Limited. It is a public sector enterprise and a mini ratna. RVNL is a project execution company and works for Ministry of Railway. RVNL works on a turnkey basis and undertakes full cycle of project development from conceptualization to commissioning. It has strong order book which provides revenue visibility of almost 3 to 4 years. We believe that Government of India's focus on infrastructure development will keep the order flowing for the company. It has robust balance sheet and is available at an attractive dividend yield of around 5%. We have assigned target price of rupees 42.25 for RVNL. Next stock is a media company, Sun TV. It is a leading regional television broadcaster in India and has presence across genres like general entertainment, movies, music, news, action and lifestyle, and it has a dominant market share in top 5 states in south of India. Along with the OTT app, the company owns and operates bouquet of around 33 TV channels in southern languages of Tamil, Telugu, Kannada, Malayalam, as well as Marathi and Bengali. A recovery in key markets could be bring add growth for the company. It has healthy liquidity in the balance sheet, which offers room to increase investment in linear and OTT space. We believe that investor can buy the stock for the target of rupees 624 till next Diwali. The last stock on our list is TCI Express. It is one of the pioneer in Indian express distribution industry. TCI's services include Surface Express, domestic and international, Air Express for the pharmaceutical, retail, engineering, and other industries. The company has recently added two new services, namely Cold Chain Express services and C2C Express services. We are optimistic about the growth outlook for FY23, expecting strong pent-up demand from the SME segment. The company expects to achieve 18 to 20% YY growth in revenue in FY23. We have assigned target price of rupees 2169 for the company. So that's all from my side. Thank you so much, everyone. Over to you, sir.
Thank you, Harsh and Nisha, for lucidly taking us through the 10 stock picks. So now this report is also available on the website. So in case you want to read it in detail, you can do that at leisure and take appropriate action which you decide at. Now, how do you invest in these stocks? Now, there is a very easy facility of basket investing which is offered by HDFC Securities. My colleague Samir Giri will now take you through the procedure for how to use the feature of basket investing, whereby you can invest in all or maybe some of the stocks at one shot. Over to you, Samir. Samir, you are on mute, it seems. You will have to unmute yourself. No, not yet.
Can
Anyway,
you check the
so,
audio settings?
till Samir is on the line, let us take some questions which are related to the stock picks. Yeah, so this recording of the webinar will also be available under the playlist webinar. So if you missed this webinar, you can re-hear it or re-watch it at leisure. This will be done in the next couple of hours. Allocation percentage for these 10 stocks. Now, it all depends on you, whether you want to invest in all 10 or you want to invest in some of them. But if you want to invest in all 10, ideally, it should be equal allocation rather than taking any subjective decision on allocating more to some and less to some others. Samir, are you ready? Is he ready, Shyam? Anyway, so let us continue with some more questions. We will not answer any questions which are out of this 10 stocks, so please bear with that. Because then otherwise this will go haywire, the whole discussion will go haywire. You will appreciate that. Seven out of 10 stocks in the list is close to all-time high. How can we enter at high price? Now, just because it is at an all-time high doesn't mean that you should not be buying those stocks. There are stocks which keep on making new highs all the time. So just because they are at an all-time high, you need not shun them. If there is value at those prices, you can still enter those stocks. Are you recommending single investment or SIP? So ideally, it should be a single investment, because then you will be able to compare your returns. But if you don't have enough money at one point of time, or if you are wary of the high levels of the stock prices, then maybe you can stagger it in terms of a SIP. But those SIPs should not be more than 3 months, ideally 3 installments, so that then you give time for the next 9 months for the stock prices to mature. How much is the minimum investment in the Samvat basket? The Samvat basket minimum investment is, I think, about less than 20,000 rupees. So if you want to invest in all stocks, it will cost you less than that. So you can of course buy multiple baskets. Will it be exit for individual strips as soon as they reach the target? Yes. It is up to you to continue to hold them, but ideally you should exit at the target prices, or you should have a stop loss in place so that even if the stock price is correct, at least some portion of the profit you are able to take home. No company from IT. Currently, we are not that comfortable with the IT space. In case we become comfortable, then maybe during the course of the year, of course, we keep coming out with fundamental ideas, and we'll issue reports on IT companies also.
Deepak sir, I think Samir is ready. Samir, can you unmute on your mobile?
Yeah, hi, good evening, everyone. Am I audible now?
Yes,
you're audible now. Samir, can you share your screen on your laptop?
Okay. So first of all, hello everyone. Myself Samir Giri. I am a product lead for HDFC Securities. Wishing you all a very happy Diwali in advance. And thank you, Deepak sir, Harsh, Nisha, for sharing the insights for the Diwali Picks recommendations. So friends, you can invest in these recommended stocks to our basket investing platform as well. And this basket consists of all Diwali stock recommendations with equal weightage. So very importantly, on achievements of target for individual stocks, we also rebalance the basket by booking profits on target achievements, for which the intimation call also will be sent to the customers. So if there are 10 stocks in the basket, and if any of the stock is reaching the target, we will be doing the rebalancing for this basket, and we'll sending the recommendation, the intimation to the customers regarding this. So we basically favor domestic oriented businesses and look for opportunities like healthcare, defense, banking, entertainment, and infrastructure for the next year, with a focus on these themes. So we have chosen our 10 picks for Samvat 2079 on a basis of these themes. So how to invest in basket using our HDFC Securities platform? Just a second. Is my screen visible, everyone?
No. No.
Not yet visible. Can you go share screen?
Yeah. Is it visible now?
Samir, there must be a pop-up on the screen saying share your screen. Can you click on that?
Yeah. Yeah, I'll click on that.
Yes, now we can.
The screen now. We can see the screen now.
Yes.
You can continue, Samir.
Yeah, so we need to log into hdfcsec.com, www.hdfcsec.com. On the main page, we have this option, basket investing. So need to click on this basket investing option.
Can you show your cursor there? Yeah, it's there. Yeah.
Yes.
Okay.
So once you click on the basket investing, it will show all the options which are available as of now. So on all small cases, we have this Samvat 2079 option, which is a Diwali basket. The minimum investment required in this basket is 19,487. So just to share with you, as we have recommended these stocks in the basket 3 days back, and that time the invested amount requirement was 19,163. So in last 2 days only, it has given a returns of 3.34% already. So in last 2 days, it has already started giving the returns. So you can just check the recommendations by clicking this basket. So we have always giving the overview on the stocks and weightage, but for that you need to log in into your account in your HDFC securities account. So once you click on this invest now, we have this option on the right hand side below this amount. Minimum investment amount required is 19,487, as I said. Below that, invest now option is given. Just need to click on that. It will give you a pop-up of your login screen. You can click on continue with HDFC securities. Need to enter the login ID and password. So here, as you all know that there are some research, there are some recent changes in login using the two-factor authentication. We also need to put the OTP. So after putting the login ID, password and OTP, you can log into your account.
Samir, I think your network is not so good. I would suggest switch off your camera for a better network so that it can work faster.
So you need to put the login ID, password and the OTP which you receive on your mobile. So this is the screen which will appear post your login. By clicking on stocks and weights, you can check the recommended stocks and the weightage is given to each and every stock. As I said, as I mentioned earlier, equal weightage is given to each and every stock. So 10% weightage is given to all the stocks. Even the sector is also mentioned for the individual stock. So as of now, the market is closed. Post 440, you can start placing the off-market order for this. And during the market also, you can buy this Diwali Peaks basket. So I request all of you, if you have any doubts, then you can also connect with our relationship manager or customer care team for any help. But you should invest in this Diwali Peaks basket as recommended by our research team. The recommendations which we had in last year has also given a very fantastic returns, and we are expecting some good returns in this year recommendations as well. That's it from my side. Over to you, Deepak sir.
Yeah, thank you, Samir, for explaining as to how one can invest through basket investing. Now, we had taken some questions. Now, let me see if there are any other questions to be shown. There are questions about index, about some specific stocks out of these 10 stocks, which we will not be able to answer at this point of time. IT, we mentioned, we are not currently comfortable. Then Deepak Fertilizer share has been pledged. Is it not a red flag? Yeah, some of the promoter shares have been pledged, but it is not such a big red flag. A lot of companies, growing companies, have some portion of their promoters' shares pledged, and typically we don't see much issue out of such pledges. They get unwound over time. How basket investing works and will be shown where in the portfolio. So it will go into your normal demat statement or your holding statement. It is not going to be shown separately. So you will have to be a little careful as to identify those basket stocks. These are available on HDFC Securities website and not on HDFC Bank website. So you are, if you are a client of HDFC Securities, you can invest the basket, invest into the basket through the securities website. See, macro, there are some macro concerns which I also mentioned in the opening remarks. But hopefully those macro concerns will get resolved over time, and by next Diwali, most of these concerns would have been resolved and we would see better times. equal allocation in terms of value or numbers, so it is value. So you will put equal value in each stock, not equal quantity. Should we maintain stop loss? Fundamental recommendation, typically you should not have a stop loss, but in case macro conditions globally or locally deteriorate very fast and you become more and more uncomfortable with holding of the stocks, then maybe you can have a stop loss as by way of a nifty value. In case the nifty goes below a particular value, you can sort of reduce your holdings across the board. Ideally, we don't recommend stop loss fundamental picks, but for people who are a little apprehensive, they can use this method. Last year's Diwali peak performance is given in the report, and we also mentioned in the talk earlier, so you can go through that. Basket name is Samvat 2079 basket. Okay, I think we have covered most of the questions, and rest of the questions I think are out of the scope of this webinar, so we will not be able to take them. So once again, thank you for joining in this webinar. We hope that we have been able to add some value, and so once again, wish you a happy Diwali and a prosperous new year ahead. Thank you.
Wish you all a very happy Diwali and prosperous New Year. Thank you. Thank you once again.